Okay, so let's make a full breakdown of the situation that we currently have on NZD JPY. Now, starting from the monthly time frame, we have a market that clearly is rejecting a quite strong monthly trend line. In fact, the market starting from here created another high here, and now the market is trying to create another high here before our rejection to the downside. Specifically, from a monthly perspective, the nearest structure is here. So this support level from which the market created this move to the upside, which after it was broken to the upside and broken back above, is again support and the level from which the market could create this inverted head and shoulders. So we definitely expect a wave to the downside, at least from a monthly perspective. Going down on the weekly, what do we have? Now on the weekly time frame, we consider the market after this impulse and correction. And by the way, if you want informations on a retracement, what are you supposed to be doing? Taking your Fibonacci on the impulse. And by doing it, you consider the market from the 0.382 tried to make the continuation to the upside exactly as you expect. However, it failed to continue higher, created this double top, and started this wave to the downside. And we can expect the market to go lower to create this M formation. It would be great to see the market create this M formation because not only we would have opportunities during this downtrend, but then from here we would have a massive opportunity to the upside. Because as you know, after an formation, specifically, if the formation is testing a strong monthly support, you definitely expect a wave to the upside. But anyway, let's not try to predict the market. We have to react to what the market is showing us. And at the moment, we simply simply see that on the monthly, we have a resistance, and on the weekly, we have a double top. Going down on the daily, what do we have? Now, on the daily time frame, situation is pretty clear. The market on the daily has just found resistance at this level, creating this move to the downside, which is definitely what you expect, considering that we had this head and shoulders here and the possibility to create this impulse correction and impulse pattern to the downside, which brings a possible opportunity. Because what do we know? We know that here we have quite strong daily support. In fact, this level was support here, against support here, against support here, and currently this level still is support. In fact, this daily candle still hasn't broken below the level. So as we're speaking, this level is still holding as support. But since we have identified this level, we also know that the market could break it to the downside. And just to keep the charts clean, let's delete this and just keep this horizontal array, which is our downside target from a monthly. So this is our long-term target from a monthly perspective, okay? Now, on the daily time frame, we know that we have previous support at this level, which is still support as we're speaking. However, if this level will be broken to the downside, all this support will be turned to resistance at this level, which would bring a beautiful opportunity because, as you know, we have a downside target. Now, before I show you how we will be approaching this kind of situation with students, let's first go and give a quick check at what we have from an NZD and a JPY perspective if we check the COT data, so what the biggest banks and institutions are currently doing in the market. Now, from an NZD perspective, we can see that net positions went from 2.4K to minus 1.4K. So from having way more longs than shorts from an institutional perspective with 19K longs and 17K shorts, to having more shorts than longs with 20K shorts and 18K longs. So overall, on the NZD, hedge funds are shifting their positioning from the long to the short side. And if we go and see what we have from a JPY perspective, we can see that on the JPY, net positions are increasing with the JPY getting stronger. So overall, we can expect a move to the downside. However, as we said many times, trading is not predictive. Trading is reactive. Therefore, if from here the market will make this move to the upside is definitely expected. It's perfectly fine because here we have daily support, and from a support level, the market should bounce to the upside, okay? And we will not be doing anything if the market will break to the upside. However, if from here we will see the market break this zone to the downside, at that point, the opportunity will come. Why? Because all this previous support will be turned resistance at this area. And after a break and a retracement, at that point, that is where the opportunity is, because we have a level of previous support turn resistance, the possibility to create this impulse correction and impulse pattern to the downside. To reach our downside target, we have the confluence of the Fibonacci's inside of this area. In fact, if we take a Fibonacci from the high to the low, we can see that we have a 0.32 or even better 50% confluence inside of this structure. And at that point, inside of this area, what we will be doing with students. Inside of this area, we will be monitoring price action with students on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside, creation of this impulse correction, impulse pattern to the downside, and creation of a lower low to basically go and reach the monthly target. But if from here the market will move to the upside, it's perfectly fine. We simply will reevaluate the new market structure that the market has created and be reactive as usual in the market and not predictive, and always adaptive to the new market structure. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.